May I request our CA Prasad and Mr. Ravindra Kore also join.
Members, let us start the program with as our predetermined agenda. Now I request CA Rudramurthy BV, Founder Director Vachana Investment Private Limited, to present on his views, economic perspective of the budget. Over to CA Rudramurthy.
Good evening, ladies and gentlemen. Good evening. Okay, so when I see the quantity of audience here, that doesn't matter to me because the quality is more important. And when I was just looking into the FKCCI material, their browser says they have an total experience and the accolades of over 100-year plus. Sir M. Vishweshwaraya is there. You have people like Abdul Kalam and many more people who have held the batons of that particular industry. And then when I see now on the stage, now you have 150 plus years of experience from people like Sunil. I have people like Deepak, and from ABB you have Jayant. And when I see them, right, they're all chartered accountants with experience of 25-30 years. And how can I forget Naveen? He's a partner with Padam Kincha. And when I did my CA, I used to keep Kincha sir as my role model. So it's like Dronacharya and Ekalavya. And I had an occasion to even speak on a stage last time along with Padam Kincha. And for me today, it is one humble start to begin this entire budget 2025. But then whatever it is, once I have the mic and once I have the chance, I want to also put my foot down and just give my perspective of budget. So quickly, I'll just put the economic perspective of budget 2025. In fact, I have a time of about 15 minutes. So I will just try to complete all the economic perspectives of the current budget. And first of all, most of you will have this question, and the same question was there even on the stage. In fact, the president now of FKCCI, he was asking to Deepak, how do you rate the budget? Out of 10, how much do you give? So this is the first question what anyone will ask. So same question I'm asking this audience here. How many of you feel budget was great? This budget 2025. Okay, that's my next question. How many of you feel budget was bad, not great? Okay, I know some of them will not raise hands for anything. So how many of you here will not raise your hand for anything? Okay, good. Thank you so much. Thank you. Okay. Let me be very clear. It all depends upon whose perspective are you looking from, which sector are you looking, and whose angle are you looking. Because for me, if it is personal consumption, consumable, durables, or middle class, salaried class people, yes, for them it was a great budget. But the same budget, if you look from the eyes of, let us say, spending towards capex, infra, defense, PSU, it is an average budget or a general budget. So it is very difficult to answer whether budget is good or bad unless you know from whose perspective or angle are you looking from. But overall, let me just present to you from different industry sectors as well as perspective on how this budget was, and specifically from the economic side. I don't want to touch anything about taxation, either direct tax or indirect tax, because you have the next speakers, experts on that particular area who will talk upon. But let me touch on economic perspective. First of all, I don't want to give you anything which is there in internet. I just want to give my perspective and share these numbers with you. Now, first of all, the budget 2025 was a real big challenge for the Modi 3.0 government because they have to take care of two important aspects. One, growth, and at the other side, they have to even maintain the fiscal deficit. So if you want growth, which has come down for last 4 years, if you see growth rates from 2021, which was at 8.7%, came down to 7%, then to 7.2%, and now that is for 2024 economic survey told the growth rate is 6.4. So that means we have reduced from 8.7 to 6.4. And the current budget estimate for 25-26 is 6.3 to 6.8. So that means even for the upcoming financial year, we are seeing it more or less same as 6.4% what we had now. It might go into that range of 6.3 to 6.8%. I know many comments came saying that the GDP is coming down and numbers are definitely talking about it. But I want each one of you to also see what is happening to fiscal deficit number. Because I don't want to read growth keeping aside fiscal deficit. We have to always look at growth and fiscal deficit together. And when I see fiscal deficit number, in 2021 it was at 6.7%. And this number came down to 6.4, then to 5.8, and now it is at 4.8% for 2024-25. So that means we have seen reduction in fiscal deficit, which is good. No doubt growth also has come down. But then look at even the fiscal deficit estimate for 25-26. That number is below the current number, which is at 4.8, and they have given it at 4.4. Now I want to bring this data comparison with that of America. Now we are only talking about India's slowing down in terms of growth rate. Look at what has happened to America. In 2021, America's growth rate was 5.8%. From 5.8% in 2021, now they have come down to 2.8%. Look at China. China's growth rate was 8.4% in 2021, and they have now come down to 5%. So that means if you look at 2021 to 2024, US growth rate has come down by 52%. China's growth rate has come down by 40%, whereas India's growth rate has come down only by 26.5%. In fact, someone asked me this question, why are you comparing it with US, China and all? Please accept GDP of India has come down because Rahul Gandhi has told that. So I said, India cannot be seen in isolation because India has imports, India has exports, and we are part of the global economy. So you can't just say India's GDP has come down, not seeing what has happened in the same period in the country like US or for that matter China. US GDP has fallen 52%, I said, and China's GDP has fallen 40%. And what is also more important is not just seeing GDP going up or coming down. What has happened to fiscal deficit in the same time? And when you see fiscal deficit in the same time, we have definitely improved far, far beyond even the expected numbers. And this tells to me that growth with control on fiscal deficit is very, very important. And more than that, look at even inflation data, look at even revenue deficit data, and also look at even the central government debt to GDP data. So when I see all these numbers, take example of revenue deficit. Again, revenue deficit has fallen from 4.3% to 1.5%, which is very good. And if you see even debt to GDP ratio, this number was 57.1 and now it has come down to 56.1, and for 2031, government aims to bring this number down to 50. And if you look at inflation in 2021 was 5.13. From there we went up to 6.7, again came down to 5.69, and now we are at 4.9. So having growth with fiscal deficit and inflation in control is very, very important for me. And budget estimates for next year, that is 25-26, inflation to come down to 4%, which is very good. And whenever inflation comes down, what happens is we see more rate cuts. In fact, we have the RBI committee meet and the policy coming out. Yeah, tomorrow the meet starts, but the rate cut happens on 7th, Friday. People are expecting rate cut. Let us see what comes out there. But what is very crystal clear for me from all this data, whatever I have presented to you, that yes, we have better growth rate compared to US and China. And we have inclusive growth, which is very important. And more than this, we have a check on both fiscal deficit and revenue deficit. And we have inflation, which is in control. And these are things which are very, very important, and not to see GDP in isolation. without seeing what has happened to fiscal deficit, revenue deficit, and inflation. And also globally, you have to make comparison of these numbers. And I always say, beta jhoot bol sakta hai, data nahi. Okay. So my Hindi is very bad. I am a Kannadiga, but I have to talk in English because a lot of people have only that one common language. But I always say, beta jhoot bol sakta hai, data nahi. And this data tells to you what it is. But if you simply see the GDP for last 4 years, you will say, yes, it has fallen down. But if you make a comparison and if you see even other supporting data to it, then one can come with a conclusion. Look at even Forex. The Forex reserves are healthy now at $640.3 billion. This is as on December 2024. However, if you see rupee depreciation, definitely it is a worrying factor. The average rupee value versus dollar was somewhere at around 74 for 2021. And in the same period, whatever I am comparing all the data, for 2024, the average rate of rupee versus dollar is at 83. That means you have seen a depreciation in rupee, but let us only look at last 1 year data also. So in the year 2024, rupee has depreciated again by 2.8% versus dollar. But look at other emerging market currencies like Brazil, Real, it is down 20%. When our rupee is down 2.8%, Brazil Real for the same period is down 20%. Mexican peso is down 18%. Korean won is down 12%. So if you see emerging market currencies and how they have done against dollar and compare that with rupee, you have these numbers, whatever I am giving it to you. However, in this budget, capex was one of the most important thing what everyone was watching closely. Because if you see last year, the capex investment government announced was 11.1 lakh crore. But then if you see the data till December, what is spent from that 11.1 lakh crore, still you have, if I am not wrong, close to 3 lakh crore plus still available to spend. And for the next upcoming 25-26, they have given 11.21 lakh crore of capital expenditure. And if you see here, what is very important is not just these numbers. Look at what is capex as a percentage of GDP. And capex as a percentage of GDP, it was just at 2.5% in 2021-22. But this number from 2.5% went up to 3.7, went up to 3.2 then, and now it is at 3.4. That means even compared to last year capex to GDP ratio, we were just at 3.2%. This year, even though the capex is only 11.21 crore estimate, still the number comes to 3.4% of GDP, which is higher. And what is very important is, again, this capex numbers we are having is keeping in mind the physical prudence what we have always maintained, and that is very, very important, because capex without physical prudence again makes no meaning. And most important, India's share in global exports and even in GDP has shown a consistent rise. That means India's export on total export as well as India's share in the GDP has also gone up consistently. In fact, we are the second largest exporters for telecommunication, computer, and information service. And most important, gross NPA of scheduled commercial banks have declined to the 12-year lowest level, which is at 2.6%. And this has happened because of falling slippage, higher write-offs, and even because of steady credit demand. Now, if this has been the economic scenario, I come from capital market background. In fact, while reading my bio, they said I have 17 years of experience in capital market. That is only 17 years of successful journey in capital market. Before that, it was a failure journey. But the part is market will make you failure anytime. So even future is also uncertain. In fact, I still remember one person asked me this beautiful question. Capital markets are always certain. Up, down, we don't know what will happen. I said in life, there is nothing certain except death. Why should capital market be certain? And we have opportunity because it is uncertain. If it becomes certain, then there is no opportunity. So be happy that it is uncertain. Accept the fact that it is uncertain. And also understand that opportunity lies only because it is uncertain. If it becomes certain, then there is no opportunity. And if someone here says, I'm not interested to make money, then I either say you're a liar or you're God. So let me now give you the capital market perspective from this budget. And if you see last year budget, definitely for me it was a howler. If you ask me why, they increased everything which was possible. They increased short-term capital gain, they increased long-term capital gain, they increased STT. In fact, STT was brought because earlier you had something which was not there. Now you have everything, STT still remains, and increase in everything happened last year. I'm sure you all know the numbers. Long-term capital gain 10% went to 12.5%. Short-term capital gain went up from 15 to 20%. STT also went up 0.01% to 0.2%. Now, why am I giving last year data? Because this year, whenever people asked me, what is your expectation from capital market from this budget? I used to only tell them with folded hands. Let Madam Nirmala Sitharaman not increase any tax. That is my expectation. And number two, I don't want her to bring any new tax. If she can do only these two things, the budget is great. And in fact, the number of memes and all the short videos and all the jokes coming on Nirmala Sitharaman was the highest in the world. Everyone were talking from popcorn GST to anything which is available. But then the surprise what she gave, no one even expected. And I say, you cannot reply back to all these jokes, memes better than what she did in terms of 12 lakhs. And all that my panelists will talk when it comes to direct taxes, when it comes to indirect taxes. But what I want to tell you is, look at capital market from last year to this year. This year, at least we had no increase in any of these things. Short-term capital gain, long-term capital gain, STT, nothing happened. And most important for me, look at how the sectors and stocks did both yesterday I mean Saturday, and then even today. We had market working on Saturday. And if you see what happened because of some of these economic implication as well as the budget outcomes, yes, there was a big push which came for FMCG and also for consumer discretionary stock. And this happened only because the big consumption boost came in the form of 1 lakh crore money now lying with the hands of these tax filers, middle class people, salaried class people. And what happened was stocks like FMCG and consumer discretionary sector stocks like Zomato, Swiggy, Hindustan Unilever, Trent, Tata Consumer, Jubilant Food, Voltas, Blue Star, all these stocks went up. And if you see even what happened to hotel, yes, look at stocks like Indian Hotel, Lemon Tree, Chalet Hotels, all this did very, very well because more spending will happen now from people because they have more disposable income with them. And even if you see travel and tour will do good, stocks like Thomas Cook already did well. And very important is every budget you will see definitely hike in rates for tobacco products or alcohol. This time they did not even speak anything, and that was very good for stocks like ITC, Godrej Philip, VST Industry, because always any budget we always say there will be increase for excise duty or for these alcohol or these tobacco products, which never happened, which was good for these stocks which I mentioned now. And very important, look at this one self-occupied property which was exempt earlier. Now they made it into two, and this resulted in boost for stocks like Shobha Developer, Prestige, Godrej Property, and few others. No doubt people will only tell last 2 days market did not do good, so budget is not good. But what you are not understanding is market does not work only on budget. Budget is one of the factor. There is so much beyond budget. On top of Trump putting all the tariffs, still our market today was just down 80-100 points on Nifty when all other Asian markets were down 2-3%. So I don't have to talk. You can tell what the impact of the budget is on market. However, if you also see furthermore, things like launch of modified Udan scheme to connect 120 new destinations and even 4 crore passengers to travel next 10 years, this was a big boost for stocks like Indigo and even GMR Airport. Don't later ask me which stocks to buy. I've been giving so many names. Only thing is you need a copy of this, surely I can give you. But again, at the end, I have a disclaimer written. Please contact your financial advisor before taking any decision on the same. Okay. After this, you can even see Jal Jeevan Mission, which got extended till 2028. That was positive to stocks like APL, Apollo, High-Tech Pipes, and many more. Also focus on schemes for footwear and leather, spiked stocks like Liberty, Mirza International, etc. But let me tell you, budget was definitely negative for few sectors and stocks, which you should avoid, or if you have to look at an exit. And this starts from oil and gas stocks. They were lower than expected subsidy. The expectation was about 40,000 crore of subsidy for this sector, but what came was only 14,700 crore. This resulted in fall in stocks like HPCL, BPCL, IOC, etc. The amount of allocation, what was expected for defense, rail, road, shipping did not come, and this resulted in fall of many defense stocks, railway stocks, shipping stocks, and many PSU stocks. And also what is important is, even though there has been more or less same numbers of last year, which they have continued in these sectors or slight increase, the expectation from market was very high. In fact, stock market is always a barometer which works on expectation versus actual. Whenever Virat Kohli bats, we expect 100. So even if he scores 95, we say he did not bat well. But when Bumrah bats, we expect only 3 runs, 4 runs, 5 runs from Bumrah. But if he scores 10 runs, we will all be cheering. So what is important is what is expected and what was actually delivered. That is what makes a short-term move in market, and that is how sentiments play. Now, keeping all these things in mind, I want to tell you, yes, budget was negative to these stocks like HPCL, IOC, BPCL because of the reduced subsidy, and also defense, rail, road, shipping, PSU stocks did not do well because capital spending was flat or lesser than expectation. And stocks like BHEL, BEL, BML, HAL, RVNL, IRFC, Railtel, etc. all this saw fall of anywhere between 5 to 10%. And these are stocks which you have to avoid. To conclude, I say this was definitely a budget which was balanced budget. For me, it was a prudent budget. And yes, for me, this was a consumption-oriented budget. And this is my perspective. And given the geopolitical tensions what we have, given the global economic instability what we have, and more important, given the lower majority of Modi 3.0 government, and you know what went to Bihar. And because of all this, for me, this still was a very, very, very good budget. And let me tell you, this 12 lakh exemption limit, whatever came, was an answer by Nirmala Sitharaman to all the jokes and critiques and all the comments which were coming on social media for her. And yes, being an Indian, I am always a person who will first support an Indian budget than a US budget or a Sri Lankan budget or a Pakistani budget. And being an Indian, I first support Narendra Modi and then I support Donald Trump or let us say anyone else. And being a proud Indian, I first support my nation. And for me, yes, there were a lot of things which were very good. And yes, there are few things which could have been done better. And with an intent of goodness which was there in this budget, I really say this was a wonderful budget and a balanced act played for all the different sectors which was there, keeping in mind the current world environment and keeping in mind the physical prudence what is very much required. She did a great budget. And my last comment, when it comes to market, I always say you have to always understand long-term investing. But yes, short-term trading is where you create your capital to make a long-term wealth. And I want to conclude this with a statement from Radhakishan Damani. He is guru of Rakesh Junjunwala, owner of DMart company, and one of the strongest pillars or the top pillars of Indian stock market. Radhakishan Damani was once asked a question, is investment better or trading better? He answered it beautifully. He said, 95% of my wealth, what I have made till today, has come only from investing. Only 5% has come through trading. So everyone concluded, oh, it is good to do investing, not trading, because 95% of his wealth came only from investing, only 5% came through trading. But then he said, no doubt 95% of my total wealth, what I have done, has come from investing, only 5% has come from trading. But the capital required to make that investment and create that 95% of wealth through investing came from trading. And I will conclude with one more last statement. I have to only talk about investment and trading, and last 23 years I have only done this. And I can only tell you this, there are many ways to make money. Too many ways are there to make money. But there is only one way to retain the money made, and that is stay humble. Thank you.
Thank you, CA Rudramurthy. An economic perspective, again, he covered the even capital market also. Only thing is, he said India is going better than US and China. Hope Trump is not listening this his opinion. Okay. So, yeah.